Everyone, we are the Group 8. So for today's video, I will be discussing the Omnibus Investment Code for the purposes of determining tax incentives and tax liabilities. So what is Omnibus Investment Code of 1987? It integrates the basic laws on investment, clarifying and harmonizing their provision to encourage and guide domestic and foreign investors. So it was passed through Executive Order 226, which took effect on August 13, 1987. So the qualified proponents who will invest in priority areas of activities listed in Investment Priority Plan or IPP can qualify for incentives. So the IPP is issued on a yearly basis and it identifies the investment areas eligible for incentives under this code. The IPP listed the following preferred areas of investment such as agricultural or agribusiness and fisheries, creative industries, shipbuilding, mass housing, iron and steel, energy, research and development, infrastructure, green projects, motor vehicles, strategic projects, hospital and medical services, and disaster prevention, mitigation, and recovery projects. So what are the mandatory inclusions? The areas or activities provided for under existing laws which specifically require their inclusion in the IPP such as tree plantation, exploration, mining, quarrying, processing of minerals, printing and publication, and solid waste management. So what are the considered export activities? Activities cover the production, manufacture of non-traditional export products and services. So to qualify the export requirement, it should be 50% of the registered company's output if Filipino-owned or at least 70% if foreign-owned. Ownership requirement, except as provided under 1987 Philippine Constitution and Foreign Investment Act, there are no restriction on the extent of foreign ownership of export-oriented and pioneer enterprise that will engage in the activities listed in the IPP. The minimum requirement to finance a project applied for registration with BOI shall be equal to 25%. The Board of Investment or BOI is the government agency tasked to accept and evaluate application for registration to avail of incentives under EO 226. Incentives privileges that may be enjoyed only upon registration. So the registered enterprises are entitled to the following incentives: tax exemptions in income tax holiday, exemption from taxes and duties on imported spare parts, exemption from wharfage dues and export tax, duty imposed and fees, tax and duty-free importation of breeding stocks and genetic materials. There are also tax credits, tax credit on the purchase of domestic breeding stocks and genetic materials, tax credit on raw materials and supplies. Also, additional deductions from taxable income such as additional deduction for labor expense and additional deduction for necessary and major infrastructure work. We have also zero-rated value-added tax for the purchases of raw materials and supplies used in the manufacture and which from part of the registered export product, and for purchases of goods, services, or properties of firms exporting 100% of their product. Fiscal incentives includes the employment of foreign nationals, the simplification of customs procedures for the importation of equipment, the importation of consigned equipment for a period of 10 years, and the privilege to operate abandoned manufacturing or trading warehouse subject to customs rules and regulations. So what are the policy on industry dispersal? So the BOI uses the incentive package under EO 226 to influence industry and encourage enterprises to locate outside the national capital region. Also, the BOI limits incentives to firms that locate in congested urban centers.
Double Taxation Agreement. The nature and purpose of double taxation agreement is: first, avoidance of double taxation; second, prevention of fiscal evasion with respect to taxes and income. So, manner of giving relief from double taxation. In order to eliminate double taxation, a tax treaty resorts to several methods. First method is It sets out the respective rights to tax of the state of source or situs and of the state of residence with regard to certain classes of income or capital. Second, it applies whenever the state of source is given a full or limited right to tax together within the state of residence. There are two methods of relief, the exemption method and credit method. In the exemption method, the income or capital which is taxable in the state of source is exempted in the state of residence. Although in some instances, it may be taken into account in determining the rate of tax applicable to the taxpayer's remaining income or capital. On the other hand, on the credit method, although the income or capital which is tax in the state of source is still taxable in the state of residence. The tax paid in former is credited against the tax levied in the latter. Procedure for availment of tax treaty benefits. The taxpayer must secure a ruling from the Bureau of Internal Revenue, or what we call BIR, through the International Tax Affairs Division that he may avail himself of preferential rates under existing tax treaties. In case of conflict between tax treaty and domestic law. As a general rule, the provisions of the Philippine Tax Code or domestic law shall apply on the income, gain, or profit of any person liable to income tax. In case of conflict between the provisions of a tax treaty and domestic law, the provisions of the tax treaty generally prevail over the provisions of the domestic law. Where the rate of tax imposed under the domestic law is lower than the rate imposed under the tax treaty, the lower rate under the domestic law prevail. Documentary requirements for the tax treaty relief application. First is proof of residency, original copy of a consularized certification. Second is articles of incorporation, for those income earner other than an individual. Photocopy of the articles incorporation. Third is special power of attorney. Certification of business presence in the Philippines. Certificate of number pending cases business permits. Original or certified copy of notarized contract. And certified copy of passport. Whole booklet of the concerned employees of the income earner. And last is notarized certification by the Philippine contractor as to the duration of the service to be performed in the Philippines by the concerned employees of the income earner for the entire duration of the subject contract.
For shipping, number 1, certified copy of proof of registry of vessel. Number 2, certified copy of notarized charter party or engagement contract. Number 3, certified copy of the license to transport business in the Philippines as applicable. For air transport, number 1, certified copy of proof of registry of airplane. Number 2, certified copy of license to transact business in the Philippines as applicable. Dividend income, if interest earnings are from loans and borrowings. A. Certification from Corporate Secretary, original copy of duly notarized certificate executed by Corporate Secretary of the corporate borrower showing all the following information. Number 1. Number, value, and types of shares of non-resident income earner as of the date of record or transaction. Number 2. Percentage of ownership of the non-resident income earner as of the date of record or transaction. B. Loan agreement. Original or certified copy of the notarized contract of loan or loan agreement for Bangko Sentral ng Pilipinas, BSP, registered loans. The contract need not to to be notarized, but a certified copy of the BSP registration must be submitted within the loan document. Interest income. C. Proof of inward remittances. Certified copy of proof of inward remittances of the proceeds of the foreign loan. D. Board of Investments, BOI registration if applicable. Certified copy of Board of Investment registration of the payer of the interest, including a sworn statement that such registration has not been cancelled at the time of the transaction. E. Proof of loan guarantee. Certified copy of proof of loan guarantee or insurance or certification of financing, direct or indirect, by the foreign government or any financial institution wholly owned by the foreign government. F. Fact of establishment for the guarantor or insurer, if applicable. Certified copy of documents establishing the foreign government-owned financial institution which guaranteed or insured that the subject loan on instances when the name of the financial institution is now different from the name indicated in the tax treaty being invoked. Royalties. Number 1. Original or certified copy of duly notarized royalty agreement, technology transfer agreement, or licensing agreement. Number 2. When applicable, A. Certified copy of Board of Investment registration of the payer of the royalties, including a sworn statement that such registration has not been cancelled at the time of the transaction. B. Certified copy of the registration of the payer of the income or withholding agent with the Philippine Economic Zone Authority or PEZA of the payer of the royalties, including a sworn statement that such registration has not been cancelled at the time of the transaction. And C. Certified copy of Intellectual Property Office or IPO registration. Capital gains. Contracts. Original or certified copy of notarized deed of absolute sale or notarized deed of contract. Example, deed of assignment which actually transfers the ownership to subject shares of stock. B. Stock certificates. Need certified copy of the stock certificate subscription contract covering the subject shares of stocks. C. General information sheets. Certified copy General Information Sheet or GIS filed with the SEC, showing the name of the subscriber when shares are not yet fully paid and as consequence stock certificates have not been issued. D. Corporate Secretary Certificate. E. Comparative schedule of property, plant, and equipment. F is financial statement. G is for certified copy of BIR Form 0605 and the official receipt reflecting the payment of processing and certification fee with an authorized agent bank under jurisdiction of Revenue District Office number 39. H. Certified copy of BIR Form number 2000 OT and the official receipt reflecting the payment of documentary tax stamp tax on the subject sale or transfer of shares tax. Filipinos employed of foreign governments, international missions, and organizations are taxable as a rule, except only to employees of the following organizations. Number 1. United Nations. Number 2. Specialized agencies of the United Nations. Number 3. Australian Agency of International Development. Number 4. Food and Agriculture Organization. Number 5. World Health Organization. Number 6. United Nations Development Program. Number 7. International Organization for Migration. Number 8. International Seabed Authority. These organizations have exemption provision that extends even to their Filipino employees.